topic, and it's something that all businesses are thinking about right now, to what extent they want to weigh in on these things in the countries in which they operate.
Exactly. So important conversations. And we're going to actually hear from Mike Novogratz and my panel a bit later on. Right now, though, back to your top business stories and Charlie Pellet.
Thank you very much. Lows of the day, right to the numbers. Look at the NASDAQ Composite Index right now, plunging 343 points, down 2.5% on the NASDAQ Composite Index. NASDAQ 100 Index down 2.7%. And we have got the Philadelphia Stock Exchange's Semiconductor Index lower now by 3.7%. Stocks tumble, yields rise, techs tank. Right now we have got the Dow Jones Industrial Average down 61, drop there of 0.2%. S&P selling off as well, lower now by 45 points, down 1.1%, very close to the lows of the day. 10-year yield 1.71%. Gold down 9, a drop there of 0.4%, down $9.54 the ounce at $17.35. Crude oil, a major story today, now down by 8%. West Texas Intermediate crude plunging $5.29 a barrel, now at $59.40. Brent, the global benchmark, down 8%, $62.53 a barrel. So stocks are falling, oil slumping, treasury yields touching some of the highest levels in more than a year. Amid concern, the Federal Reserve risks letting inflation accelerate. Recapping, repeating those numbers worth re-examining here. NASDAQ down 2.6%. We've got the S&P down 1.2%. Dow Industrials down 0.2%. And 10-year yield 1.70%. I'm Charlie Pellet. That's the Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
This isn't Marvin Gaye, is it?
Oh, it is.
It is. Okay. That's what I thought. I actually didn't even need to Google it.
I think, right?
Is it?
Yeah.
Is it with Tammy or no?
It is. And it's one that our producer, Paul Brennan, thought would go great.
Paul Brennan.
It's all about building. If I could build my whole world around you.
There's a little Tammy for you.
Yeah, absolutely. There you go. And it's all about, home building stocks. You look at what's going on today. I mean, the S&P 500 home building index is down 4.9%. We got the latest numbers out of Freddie Mac, the 30-year national average for fixed-rate mortgages up at 3.09%, sort of continuing a trend pretty much the entire quarter of rising. You've got treasury yields going up, and you figure, yeah, that's how it should be, right?
Right.
Maybe.
If you look back at the first quarter, it hasn't been that way at all. In the sense, if you look at the stocks, right? Yeah, sure. We've seen yields go up. We've seen mortgage rates go up along with yields. But if you look at that S&P 500 home building index, as of yesterday, before the decline we're seeing here, it was up 24% for the quarter. And, if you end up with anything like that by the time we get through the next week and a half or so and get to the end of the quarter, you'd be talking about the biggest first quarter gain since 2012. And think about it. It's not like the housing industry generally does all that much in this particular quarter. It's all about the spring selling season, right? Which we haven't even gotten to yet. So, what we're seeing this quarter, with the notable exception of today, is that for the most part, the home building stocks are defying the increase in the cost of money, whether you're looking at, say, the 10-year treasury yield or that 30-year fixed mortgage rate. So, that's something kind of different because it runs counter to what you would intuitively think. Now, we should note that in the first week of this year, you saw the rate on the mortgages at 2.65%, which was a record low, and you're now talking close to 3.1%. So, still fairly low by historical standards.
So low. Let's just stop
That's
there for a moment. Like when everybody's like, oh, mortgage rates are going up. I'm like, not so much.
That's the thing. I mean, they're still so low. I mean, you talk to anybody who bought a home in the early 2000s, the 1990s, and 1980s. I mean, there were mortgage rates that were so much higher than now.
Yeah.
My first house, I paid 6.75%.
That's
Right.
low,
Right.
relatively.
Right.
I've heard stories of people paying in the teens.
Well, depending how far back you go.
Early 80s, right? We were talking about this
Exactly.
yesterday.
The early 80s, I mean, you were sure paying in the teens and then some.
Right.
Right.
Exactly.
Anyway.
Well, but listen, we have to watch the home building area, right? Because that has provided a ton of momentum for the economy. You know, people who buy homes are usually optimistic about the outlook, and then they buy a lot of stuff to fill them, Dave.
And we've certainly seen that over the course of the past year with the coronavirus pandemic, for sure. If you want to know more, folks, send me an email. I will get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave Wilson, thank you so much. Did you have a question for him?
I mean, it just talks about this chart, like shows demand for homes. If this is traditionally not a season where people are buying homes, they wait for the spring. The story that we've heard over the last year since the pandemic began is people are ready to buy homes and they are paying top dollar in suburbs.
Yeah, that's one piece of it. Another piece of it, you think about why are rates going up? It's because there's anticipation of a stronger economy, and that means more people with the kind of wherewithal you need to buy homes or perhaps to buy bigger homes or whatever. So, you know, it turns out to be a plus potentially for the housing industry as opposed to a minus in terms of, you know, the cost of the mortgages going up.
Well, and as we start to see mortgages going up, we often see people who are maybe a little bit on the fence saying, okay, it's time for me to just do it. Dave Wilson, thank you so much. Dave's going to be around a little bit later on with his stock of the day. Well, we are moments away from heading to the White House. President Biden expected to make some comments when it comes to delivering 100 million COVID-19 vaccines. Off to the White House we go.
Good to see you all. When I announced in early December that I had a goal that I set of administering 100 million shots for the virus in the first 100 days of our office, 100 million shots in 100 days. It was considered ambitious. Some even suggested it was somewhat audacious. Experts said that the plan was, quote, definitely aggressive, and distribution would have to be seamless for us to be successful. One headline simply put it, quote, it won't be easy, end of quote. Well, it wasn't. When we took office, there was a lot that had to be done. We needed more vaccines, more vaccinators, more places for people to get vaccinated. And we needed a whole-of-government approach. So I directed Jeff Zients, the coordinator of our COVID-19 response, to put us on a war footing, and I meant that in a literal sense, to get us on track to truly beat this virus. And I'm proud to announce that tomorrow, 58 days into our administration, we will have met my goal of administering 100 million shots to our fellow Americans. That's weeks ahead of schedule, and even with the setbacks we faced during the winter storms. And there's another big step on the path to putting checks in pockets and shots in people's arms. When we crossed the 50 million doses just 3 weeks ago, I told you that every time we hit the 50 million mark, I'd update you on our progress. So here's where we are today. 8 weeks ago, only 8% of seniors, those most vulnerable to COVID-19, had received a vaccination. Today, 65% of people aged 65 or older have received at least one shot, and 36% are fully vaccinated. And that's key, because this is the population that represents 80% of the well over 500,000 COVID-19 deaths that have occurred in America. We have nearly double the amount of vaccine doses that we distribute to states, tribes, and territories each week. We have gone from 1 million shots a day that I promised in December before we were even sworn in to an average of 2.5 million shots a day, outpacing the rest of the world significantly. And here's how we accomplished this. Using the power given to a president under the Defense Production Act, we expedited critical materials in vaccine production, such as equipment, machinery, and supplies. We work with vaccine manufacturers to speed up the delivery of millions more doses and brokered a historic manufacturing partnership between competing companies who put patriotism and public health first. These steps put us on track to have enough vaccine supply for every adult American by the end of May, months earlier than anyone expected. And we stood up or supplied more than 600 community vaccination sites that are administering hundreds of thousands of shots per day. We launched the federal pharmacy program, which has allowed millions of Americans to get a shot at one of 14,000 local pharmacies in this country, the same way they get their flu shot. And for folks who aren't near a pharmacy or mass vaccination center, we've supplied more than 500 mobile clinics, like pop-up sites or vans, meeting people where they are. We deployed nearly 6,000 federal personnel, including FEMA, active duty military, and Department of Health and Human Services to support vaccinations and serve as vaccinators, putting the needle in people's arms. We're also supplying vaccines to community health centers to reach those who have been the hardest hit and suffered the most, especially Black, Latino, Native American, and rural communities. This is really important because we believe that speed and efficiency must be matched with fairness and equity. Now, when President Harris and I took a virtual tour of a vaccination center in Arizona not long ago, one of the nurses on that tour, injecting people, giving vaccinations, said that each shot was like administering a dose of hope. A dose of hope. That's how she phrased it. Behind these 100 million shots are millions of lives changed when people receive that dose of hope. Grandparents can hug their grandchildren again. Frontline workers who can show up at their jobs without the same fear they used to have. Teachers with the confidence to head back into the classroom. These milestones are significant accomplishments, but we have much more to do, much more to do. And the American Rescue Plan will help us do it. In addition to the cash payments it provides to you and your families, it also provides the funds to add vaccinators, to supply more community vaccinations, support more community vaccination centers, and increase testing. It'll help us accelerate nationwide efforts to reopen our schools safely. And as I told the nation last week, I've directed all states, tribes, and territories to make all adults eligible to be vaccinated no later than May the 1st. I'm glad to see that several states are already taking that step to make more and more Americans eligible, even before May 1st. Tomorrow, we will hit 100 million doses our administration has administered. But I've always said, that's just the floor. We will not stop until we beat this pandemic. Next week, I will announce our next goal to put shots in arms. This is a time for optimism, but it's not a time for relaxation. I need all Americans, I need all of you to do your part. Wash your hands, stay socially distanced, keep masking up as recommended by the CDC, and get vaccinated when it's your turn. Now's not the time to let down our guard. In the last week, we've seen increases in the number of cases in several states. Scientists have made clear that things may get worse as new variants of this virus spread. Getting vaccinated is the best thing we can do to fight back against these variants. While millions of people are vaccinated, we need millions more to be vaccinated. And again, I need you to get vaccinated when it's your term and you're able to do that. I need your help. I need you to help. Not just the country, but your family, your friends, your neighbors. Get them vaccinated as well. If we keep our guard up, stick together, and stick with the science, we can look forward to a 4th of July that feels a bit more normal, with small groups able to gather for cookouts in backyards, and where we began to declare our independence on Independence Day from the virus. Look, together we're going to come through this stronger, with renewed faith in each other and our government that fulfills its most important function, protecting the American people. Let me be clear again. Wearing this mask in the meantime, making sure you wash your hands, making sure you socially distance, listen to the CDC. We've got to reach the point where we have herd immunity, meaning where we have a vast majority of the American people have been vaccinated before we can stop wearing these. So please, please, don't let what you see happening in Europe and you see on television. Keep the faith. Keep wearing the mask. Keep washing your hands. And keep socially distanced. We're going to beat this. We're way ahead of schedule, but we got a long way to go. So I just wanted to bring you up to date. I thank you very much, and may God bless America. May God protect our troops. Thank you so much.
Mr. President, Vladimir Putin wants open talks. Would you agree to that?
All right, President Biden making some comments, giving an update on COVID-19 and particularly the vaccine rollout. The president saying that we will clinch his goal of administering 100 million COVID-19 vaccine shots in the first 100 days of his presidency, reaching that mark 6 weeks ahead of time, ahead of their schedule.
Yeah, the president also saying that while we are ahead of schedule, there is still a long way to go. He repeated something that he has been saying throughout his presidency and, of course, during his campaign. I need all Americans to do your part, keep masking up as recommended by the CDC, and get vaccinated when it is your turn. He did reference the increasing cases that we've seen over the last week in some states. Overall numbers have gotten better, but at the same time, there are places where this is spiking. It's also coming at a time where spring break is happening for colleges around the country, and there are reports of many college students and many people, especially in those areas that don't have mask mandates, basically acting like there is no pandemic.
Well, listen, it's coming at a time as the world is opening up. We talked about this for restaurants here in New York City, in New Jersey, right? Increasing the capacity that's allowed at restaurants in particular. And New York has been very slow to reopen up. We talked about earlier the kind of feud between the New York City mayor and the New York State governor about opening up gyms or fitness places and workout places. So, listen, society's opening up. We've talked to many in the medical world about concerns about, cases coming down, but we're plateauing. We can't seem to kind of break a mark lower. And that is certainly worrisome for anybody who oversees any kind of hospital system, because there's still a lot of folks in hospitals with COVID.
I talk to Nisa Ernst every Thursday on Quick Take. She's a nurse manager at the Bloomberg School of Public Health and at
Johns Hopkins
at Baltimore. Yeah, and she said that one thing that she noticed over the weekend, anecdotal, is that the people that she's seeing being admitted to the hospital, her hospital, remember, she's nurse manager at one hospital, they're younger and they're sicker. So they're people who are significantly younger than the previous profile of traditional patients who were hospitalized. And she thinks part of it has to do with the variants, again, anecdotal,
right.
And part of it has to do with our changing attitudes about this. Now that so many people who are older have been vaccinated, a lot of young people still think that they're not ones who will be severely affected by this.
Well, listen, all you have to do is hear some of the stories about the long haulers that tend to be younger individuals, and it's pretty troublesome and something to make you think twice about it. But it's, that younger component, Tim, I feel like we've talked to a few doctors too, and that's what they say in terms of the changing demographics. It is skewing to a younger population, and it does make sense as more older individuals are vaccinated.
The president's saying get vaccinated when it's your turn.
Yep.
I'm ready.
Yeah, exactly.
I'm ready.
I know you've been ready forever. But he said be vigilant in the same time. So again, the president saying the U.S. is expected to meet that 100 million shot goal 6 weeks early. All right, you're listening to Bloomberg Business Week. Let's get a check on world and national news.
Let's get to Nancy Lyons in Washington. Hey, Nance.
Hey, Tim, thanks. President Biden says he had to overcome a lot of obstacles to tackle the coronavirus pandemic when he took office. But he says he will meet the goal he set of 100 million shots well before the 100 days he promised.
And I'm proud to announce that tomorrow, 58 days into our administration, we will have met my goal of administering 100 million shots to our fellow Americans.
Meanwhile, the nation's top health officials told the Senate Health Committee today we're still in a race to vaccinate Americans faster than variants can spread the COVID-19 disease.
Former Food and Drug Commissioner David Kessler, who's back as an administration science advisor, spoke of research on whether vaccines will have to be modified for variants.
While the current vaccine had proven highly effective, we are also supporting studies on variants and efforts to produce the next iteration of these vaccines if the need arises. We are planning for potential boost doses of vaccines if they are needed.
Drs. Anthony Fauci and Rochelle Walensky added that the percentage of population that needs to be vaccinated so normal life can return is a moving target because of the variants. In Washington, Irv Chapman, Bloomberg Radio.
And the House today has been taking up the recent increase in hate crimes against Asian Americans. It comes as Atlanta deals with the deadly shooting in which 6 of the 8 people killed were of Asian descent. Republican Congressman Chip Roy of Texas says while the violence should be condemned, it's dangerous to blame political speech. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. This story also caught Tim and my attention. In fact, you caught up with Senator Elizabeth Warren about it, and this is about her and AOC Alexandria Ocasio-Cortez. They are pushing for a green mass transit bill, right, to be part of the big infrastructure overhaul.
$500 billion. And yeah, a big thank you to Jarrell Dillard and Leslie Kaufman, our Bloomberg colleagues who broke this story. But yeah, she's one of 2 proponents of the Green New Deal, along with Alexandria Ocasio-Cortez, who are behind this bill. They're joined by Senator Ed Markey of Massachusetts and Representative Andy Levin of Michigan. My big question for Senator Warren, and this interview is going to play on Quick Take tonight right at 5 p.m. And you can access it by going to bloomberg.com/QT and, of course, watch it on the terminal as well. Was how do you get Republican support for this? Because the Biden administration just pushed a $1.9 trillion bill through without one single Republican vote. So how do you do it?
Well, you know how you do it. You promised each of these states or these Republican states, projects.
And that's the thing.
And
she did say there is not one state in the United States, there's not one senator who represents a state that does not want an improvement in infrastructure. However, I will say she stopped short of naming any Republican senators who she expects to support this.
What's sad about it is both Republicans and Democrats have come out in years past and shown support for infrastructure spending. Just drive around our roads, especially here in the New York metro area. I mean, there's a lot of work that needs to be done. And if you go across the country, that's the same situation. So it's kind of a little frustrating that we're seeing them come to, a dispute over it when they really both agree that it needs to be done.
And the thing is, this stuff is possible. It doesn't just happen in China, or it doesn't just happen in Norway, right? Like there are good infrastructure projects and incredible infrastructure projects around the world. We just haven't really had the political appetite for it in the U.S. for years.
Creates jobs, creates new industries, helps build that new green industry that everybody else is working on as well. So looking forward to that interview at 5 on Quick Take.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market. We're looking at a 4% drop right now for the NASDAQ Composite Index. NASDAQ 100 Index also extending its slump. Actually, NASDAQ is down by 3%. We've got the NASDAQ 100 Index also down by 3%. Here with all of the details on today's selling, NASDAQ down 400 points. Let's head right over to the First Word breaking news desk for today's afternoon call. And here is Bill Maloney.
Charlie, U.S. stocks are under pressure today as rates continue to climb, and amid COVID worries in Europe, Dow's currently down 166 points, S&P's dropped 60, NASDAQ is now lower by 405 points. The U.S. 10-year yield jumped to 1.75%, gold is down 10, and oil is under pressure, down 9%. Transports are a little changed. Among the main 11 S&P sectors, only financials gained. Energy and tech were under pressure. And leaders to the upside in the Dow, UNH, JP Morgan, and Goldman Sachs, while Chevron fell 3.7% and led to the downside. In other news, the French Prime Minister announced a Paris area lockdown and said the virus spread is looking like a third wave, and Biden eyes mid-May to begin relaxing travel restrictions. In deal news, Trump said to explore a deal for a $21 billion rival Hartford Financial. And wrapping things up, Nike and FedEx report after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
Okay, thank you very much, Bill Maloney. And again, worth repeating, 3% drop for NASDAQ, down 409 right now. The NASDAQ 100 Index down 3%. 10-year yield 1.71%. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet.
Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. Well, it's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we're taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's Janet Wu.
The pandemic changed how we work and where. Gone are the splashy headquarters to impress customers and recruit employees. Boston-based cybersecurity firm Rapid7 unveiled a gorgeous new complex in late 2019. Workers barely moved in when they had to move out. Travel platform Lola.com was also forced to pivot. Here's CEO Mike Volpe.
We've embraced remote at Lola. We've had people move to North Carolina, Colorado, California, Florida.
That shift just after Lola.com built hip new headquarters in Boston's financial district.
Yeah, it was a beautiful office. Looking back on it, certainly tough timing 6 months before a pandemic hits to spend a bunch of money to invest in a new office and sign a lease and move everyone in and then not be able to use it.
With long-term leases, most companies are locked into their headquarters, even as they sat empty during a year like no other. I'm Janet Wu, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
And gotta say, taken just a leg down in the last hour or so, and we are pretty much at our lows of the session when it comes to those major equity averages. Down 1.5% on the S&P, Dow off 0.5%, and the NASDAQ really taking it. The biggest decliner on a percentage basis, down 3% or a decline of 406 points. Let's get into it with Alan Zafran, founding partner and co-CIO at IEQ Capital, $11.6 billion in assets under management, joining us once again from Foster City, California. Alan, nice to have you here with Tim and me. So, okay, how do you see like a trade like today, where we're seeing more momentum to the downside pick up on the equity trade, particularly the tech trade, and one day after the Fed, where some said, where Jay Powell came out and said, listen, we're going to keep rates low for some time?
Hey, Carol and Tim, thanks for having me back on the show. And today is a microcosm of the battle we're going to see in the next 3 to 6 months. And it's the battle between rising rates and inflation scares stopping this massive large cap growth rally we've had for many years versus the fact that if inflation is kept under control, you're actually going to have productivity growth, really nice real GDP growth, actually earnings growth better than expected. And that drives stocks higher. So what's really spooking the market is something called the base effect. The next 3 months, when we talk about inflation, it's going to look like it's going crazy because in March and April and May last year, prices were falling. So when we compare inflation year over year, it's going to look terrible for the next 3 months. It's going to spook everybody. This 10-year is headed to 2%.
How soon?
The question we have to, listen, it could be weeks. I mean, this market is moving quickly, right? But the short end isn't going anywhere because Powell's told you it's staying there, if you believe him, 3 more years. If you believe the futures market, at least 2 more years. So the curve steepens, but 2% isn't a problem. It's the speed at which this moves. The market can't calibrate quickly enough, right? It has to move in fits and starts. But the question, Tim's really, is this inflation going to be tolerable or is it going to get out of control? I will tell you that we still believe it's tolerable.
Which is what Jay...
believe it.
Which is kind of what Alan J. Powell seemed to say, too. Hang on a second, though, because Tim and I are like, what did he say? Did he say baked effect? What did you say?
Base effect.
Base.
I apologize.
Okay. Meaning what, though?
So you're comparing when you read about what's going on, you compare year-over-year statistics. If I'm arbitrarily comparing last March, April, and May, when we were in the throes of locking down and prices were falling,
right?
And now you look at prices this year, we will look like we're speeding up extraordinarily because you're comparing rising prices this year with falling prices last year. By the time we get to July and August, even though prices this year are going up, prices last year were also going up, so the spread will begin to narrow and it will calm down investors that the rate of inflation again is moderating. So we have to get past the next 3 or 4 months and see the moderating rate of inflation, which Tim will probably stop long-term rates from going higher, and then everyone will chill and say, oh, Apple and Microsoft are still solid businesses and they're going to do just fine. And let me give you the other irony of all this. This is definitely a year where probably value stocks, non-large cap tech stocks probably outperform, zone 2 as well, the large cap stocks. But pre-COVID, we had a slow, grinding economy, and growth stocks, the companies that generate growth regardless of the economy, outperform in a slow-growing economy. We're going to head right back there when we get through all the sugar high from the fiscal stimulus. So it's possible a year from now we'll be talking about growth stocks outperforming value stocks again.
So what are you telling clients?
So
what are you telling clients right now? Are you telling them essentially just sit tight for a few months, don't do anything?
Yeah, and buy the dip if it comes in, because this is going to be you're going to see real GDP growth. The Fed is saying 6.5%. This economy in the U.S. could go up 8 to 10% this year, and if it's really non-inflationary, we're going to have huge earnings outperformance relative to expectations. And cash is trash at 0%, and bonds don't pay you much. So stay the course. Value stocks are maybe a trade, but ultimately you need balance. Don't throw away the growth stocks. Have both. Don't, stay rational, stay diversified.
So just quickly, 20 seconds, when you say buy the dip, are you talking about buy the dip of those growth stocks that you like so much?
Yeah, but let's be clear about it. These growth stocks are like, wild roller coasters. So don't buy on the first day it's down. Pick a spot where you can get comfortable and be a long-term investor. Don't think you can day trade these. They're insanely volatile.
All right, going to leave it on that note. Hey, Alan, have a good weekend. Alan Zaffron, founding partner and co-CEO of IEQ Capital, $11.6 billion in assets under management, with us from Foster City, California, but on a day where NASDAQ is a little bit more on sale because it's down about 3%.
Hey, he's saying buckle up.
Yeah, but he's longer term, still likes those growth names, right? And sees that's where the momentum will be. All right, stick around. We've got the closing bell in just a moment right here on Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market. Folks from the Duckhorn portfolio ringing that closing bell. Today, the Dow, the S&P, NASDAQ all slump. Let's begin with NASDAQ, the composite index down 3%, plunging 409 points today. Still positive on the year, up 1.77% year to date. NASDAQ 100 index lower today by 3.1%. S&P down 58, drop there of 1.5%. The Dow down 153, down by 0.5%. 10-year yield 1.71%. Stocks fell, oil slumped, Treasury yields touched some of the highest levels in more than a year. Amid concern, the Federal Reserve risks letting inflation accelerate. Alan Zafran is founding partner and co-CEO at IEQ Capital. He was our guest moments ago, right here on Bloomberg Business Week.
Today is a microcosm of the battle we're going to see in the next 3 to 6 months, and it's the battle between rising rates and inflation scares stopping this massive large-cap growth rally we've had for many years versus the fact that if inflation is kept under control, you're actually going to have productivity growth, really nice real GDP growth, actually earnings growth better than expected, and that drives stocks higher.
An 8% plunge today in the price of crude oil. Gold lower today by 0.6%, down $10 the ounce to $17.34. We're getting word that a second child sustained a significant injury from a high-end Peloton Tread Plus machine. The child is expected to fully recover, but that announcement comes after Peloton issued a safety warning to users of its Tread Plus treadmill after it learned about the death of a child involving the equipment. Peloton shares down 4.7%. Hartford Financial Services confirming it has received an unsolicited proposal from Chubb to acquire the Hartford. Hartford shares up 19%. Charlie Pellet, Bloomberg Radio.
Whoa, yeah, what I say. Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, let's do a little bit more of a deeper dive. Charlie breaking down those closing numbers. NASDAQ 100 extending its slump to 3% amid the technology sell-off. And, the biggest slide, that NASDAQ 100 down 3.1%, biggest slide in 3 weeks. All right, S&P 500, though, the big cap stocks, taking a look, 192 names, Tim, higher today, 313 lower, so overwhelmingly to the downside. We definitely saw that.
Yeah, there's a little bit of green in there when it
little.
comes to the sectors. Financials higher by just 0.5 percentage point, but everything else in the red. Industrials lower, healthcare, utilities, but energy was the real laggard today. Not a surprise with oil prices doing what they did. Energy down 4.68%. Information technology, we saw it play out on the NASDAQ as well, down 2.8%, and consumer discretionary down 2.6%.
Right, WTI crude was down just about 8% for the day, so definitely dragging down the equity trade for any of those big energy players as well. Let's bring in Bloomberg News cross-asset reporter Katie Greifeld, who's also been watching the market for us. And this, don't forget, we're going to have some earnings from FedEx and Nike. We'll bring them to you as soon as they cross the Bloomberg. Katie, what jumps out at you today?
I mean, from my perspective, today was all about the Fed. And it's kind of funny because this time yesterday, if we rewind to 24 hours ago, the market closed on a pretty risk-positive note. It felt like, Jerome Powell did a pretty good job of threading all the various needles that he had to thread. But, I mean, as markets have just digested the press conference that we got, the update of the dot plot, there were two real wild cards. One was the dot plot that you had two more officials versus December that are expecting a rate hike in 2023. There's a concern out there that view could start to catch on and you see more officials move their dots around. The other part, which I think is really interesting, is that there was this idea of prints versus forecasts in terms of dictating Fed policy. And that's the idea that the Fed is going to wait for the data to actually show improvement, to show inflation, to see the employment rate getting to specific targets before they act, versus the Fed moving based on their forecasts. So that has markets a little bit spooked because there is a concern that the Fed could fall behind the curve when it comes to inflation, especially given that we have a $1.9 trillion stimulus package on tap. Checks are starting to hit bank accounts. All of that is contributing to this kind of jittery mood that we had throughout asset classes today.
Hey, Katie, I want to jump right in because we're getting FedEx earnings right now. For the third quarter, adjusted earnings per share coming in above estimates, $3.47. Estimates were $3.22. Third quarter revenue beating estimates, $21.5 billion, estimates of $20.2 billion. And FedEx third quarter adjusted operating margin coming in lower than estimates, 4.9% versus estimates of 5.87%.
Yeah, quick check on the stock here in the after hours, down about 1.3% here on that earnings news. So we're seeing some selling. Stock was up about 1.5% for the year overall, year to date here in 2021. It was down about 0.9% in the regular trade. But again, we're seeing some selling here in the after hours. So some disappointment perhaps there. Now just down, Tim, about 0.6%.
Okay, so Katie, main differences between what we saw as a reaction in markets yesterday, the bond market and the equity market, versus what happened today. I mean, what was it that triggered this shift?
It felt like things changed overnight in terms of the mood music. And you did have some news out of the Bank of Japan that they were widening the trading band around their own 10-year yield, I believe. So that kind of sparked this initial rethink of, where things stand when you look at the global picture. And I mean, clearly, when coming into markets this morning, waking up, looking at how things were moving at 7, I mean, that mood has carried throughout the day. Yields did come down a little bit on the 10-year. We're at about 1.71 now versus the high of 1.75. But it does feel as though the path of yields, at least for the long end, the 10-year, the 30-year, it does seem to be that, the path of least resistance is higher. And that's what's just sending shudder through tech stocks. I mean, the NASDAQ 100, to see it fall 3%, that's a big move.
Right, exactly. But it did kind of bottom out, and we did see a little bit of buying in the final few minutes of trading. And I guess we'll have to see whether or not it continues. This is just a case, Katie, of the market saying, well, Jay Powell, we think inflation is a bigger problem than you think it is, right? And the market kind of, moving in that direction.
Exactly. And I don't want to throw around the term bond vigilante too lightly here, but it does feel like the market is almost trying to bully Jay Powell into expressing some sort of concern over inflation. But his tone has been remarkably consistent that any sort of pop in inflation that we could get coming out of these lockdowns when the economy is truly reopened, he doesn't expect it to be sustainable, the kind of non-transitory rise in prices that would cause the central bank to move, especially in light of their new average inflation targeting regime.
All right, and I just want to mention FedEx now, that stock is up about 1% here in the after hours, so bouncing around here after earnings. All right, Katie Greifeld, Bloomberg News cross-asset reporter, joining us right here on Bloomberg Radio.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson, come on in and give us your stock of the day.
That would be Vericel, Tim. It's a maker of medical treatments based on human tissue. One is an implant that helps heal knees with a patient's own cartilage. Another is a graft for burn victims that's made from a patient's skin. Vericel was founded in 1989 as Ostrom Biosciences and went public in 1997. The company became Vericel in 2014 and adopted its current ticker, VCEL. The shares fell so far over the years that the company did a 1-for-20 reverse split in 2013. Some of the losses have been recouped thanks to a 21-fold surge since 2016. Vericel's rebound accelerated after the company was named to the S&P Small Cap 600 Index effective Monday. It will replace energy producer QEP Resources, which was bought yesterday by Diamondback Energy. Vericel's selection means that funds tracking the Small Cap 600 will have to own shares, and that prospect lifted the stock to its highest price since November 2011. It closed with a gain of 13.5%.
Yeah, I'm just looking at the FA page. I mean, they're looking at some pretty substantial revenue and certainly earnings growth. I mean, this stock is up 72% so far this year, Dave.
Which is saying something, you bet. And, of course, now you've got the index effect at work, And so the shares are up even more.
All right, going to leave it there. Dave, thank you so much. Really appreciate it. Let's get to World of National News.
With Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden is cheering the early fulfillment of his goal of getting 100 million Americans vaccinated against coronavirus during his first 100 days in office. He says we'll meet that mark tomorrow on day 58. He says they've been able to double the number of shots thanks to the use of the Defense Production Act that made critical materials available.
We have gone from 1 million shots a day that I promised in December before we were even sworn in to an average of 2.5 million shots a day.
The administration also announced today it will send about 4 million doses of AstraZeneca's COVID-19 vaccine to neighboring Mexico and Canada. The deal happened alongside an announcement by Mexico that it will crack down on the flow of migrants across the U.S. border. President Biden and Vice President Harris will be meeting with Asian Americans tomorrow in Georgia in the wake of this week's deadly shootings at 3 Atlanta area massage parlors. The pair were already scheduled to travel to Atlanta to tout the $1.9 trillion COVID-19 relief bill, but the trip took on new meaning after the shootings. Today, Atlanta Deputy Police Chief Charles Hampton Jr. confirmed the suspect in the shootings, Robert Aaron Long, had been to the 2 Atlanta spas before.
What I will say is that he did frequent, as the question keeps coming up, that he did frequent those 2 locations within Atlanta.
And he says they've learned that Long had purchased the gun he had the day of the shootings. He says nothing is off the table in their investigation into the deaths, including whether they were a hate crime. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. And listen, one of the industries that we continue to watch has to do with sports betting, and we're seeing it kind of continue to grow around the country.
Yeah, Connecticut could have sports betting by football season. Look, the challenging thing for companies that do this is it is a state-by-state basis, but the tide is certainly shifting. Connecticut announced a deal with the state's 2 casino-operating Indian tribes that could put sports betting in place by the start of the NFL season later this year.
Yeah, so listen, this is increasingly coming in. I guess the state legislature in Connecticut, they're going to consider the expansion as part of its budget debate coming in May and June, according to the Commissioner of Economic Development for the state of Connecticut. If approved, then the terms would go to the Federal Bureau of Indian Affairs, which must then review new contracts with the tribe. So listen, this goes on and on. Like, I have mixed feelings about this.
Why?
Like all this online betting,
Right.
betting like I
And
don't
like
know.
going to a different state to place these bets,
I guess maybe I'm just not a gambler and a bettor, so it's just a thing that, is this a good industry? Does it really, is this good for people?
Look, I think that's a really good question. I think
that's a different argument.
It is, and I think that the challenging thing is what it means for a place like Las Vegas, or what it means for areas of the country and states that did have sports betting, at physical casinos, right? Like the actual physical casino, and not necessarily with this story, but the actual physical casino is being disrupted by online sports betting.
Absolutely. And listen, we've had the folks on from DraftKings and other places, and this is definitely a bigger, industry, growing industry, and we're continuing to see it really kind of make its mark around the country. But, and I understand it's like a big, people are getting into it.
They are, and look,
people want to bet.
It's a story about municipal revenues as well, because it is a tax story, right? And in this case, Connecticut will receive a tax rate of 18% on internet casino wagers and 13.5% on sports betting. It is.
Right. And those contracts last as long as 15 years. So listen, you could see the 5th wealthiest state by per capita income is budgeting $50 million in tax revenue from the new wagering next fiscal year. So, they're talking about already some pretty big money coming into the state coffers. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with earnings on a down day for stocks. Nike just reporting revenue for the third quarter that missed the average analyst estimate. Nike's third quarter revenue, $10.36 billion. As we look at the headline from the Bloomberg estimates there, 11 billion Nike shares down now by 4%. FedEx reported adjusted earnings per share for the third quarter that did beat the average analyst estimate. FedEx up now by just over 1%. Also, an additional headline from the Bloomberg Professional Service, the NFL signing long-term media distribution agreements. Stocks fell from records. Oil slumped. Treasury yields touched some of the highest levels in more than a year. Amid concern, the Fed risks letting inflation accelerate. What a difference from this time yesterday with the S&P down 58, a drop of 1.5%. The Dow down 153, down 0.5%. The real damage, though, tech stocks, NASDAQ 100 index down 3.1%. NASDAQ 100 index lower by 3%. NASDAQ down 409 points. 10-year yield, 1.70%. Gold down 0.5%. 17.36 the ounce. Crude oil, major story today, selling off now. West Texas Intermediate crude plunging by 8.5%, down 5.44 a barrel. WTI back below $60 a barrel, 59.16. So again, recapping, stocks lower, S&P down 1.5% today, NASDAQ plunging 3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So Charlie, breaking down those Nike earnings, Tim, the stock was down a little bit more. Right now, it's still down about 1.4% here in the after hours. So some disappointment. We definitely see it.
Yeah, that's right. You heard from Charlie. Third quarter revenue, it missed estimates. All estimates were 11 billion. 10.36 is what they saw.
All right, so let's break down the quarter, get into the details. Poonam Goyal is senior U.S. retail analyst at Bloomberg Intelligence. She is back with us on the phone in New Jersey. Poonam, nice to have you here. Okay, Nike was down, and now it's up about 1% or so.
Yeah.
How do you read the quarter?
Yeah, sure. So, revenues were light of expectations, but if you think about why they were down or why they were below consensus, is really because of two reasons. One, North America, the shipping bottlenecks that we've heard for the past month from other retailers as well had hit Nike North America sales as there were just shortages in supply. So that's what led to an 11% decline there versus a low single-digit increase estimate. So that's really the biggest part of the delta. The other delta is in EMEA. Because of store closures there from, the reflaring of COVID, sales had dropped 9%. So if you were to take out those scenarios, which were really not something that they could control, they were uncontrollable, they actually had a pretty good quarter. And if you look at the bottom line, gross margins expanded quite nicely in the quarter, over 100 basis points. That shows just the power of their full price selling and just brand health overall. So in all, while there was a shortage on the top line, it wasn't driven by anything that they could have mitigated on their own. And we see that demand coming back as these shortages are reversed, especially in North America. And in Europe, as just COVID stops at some point, we think Europe will recover too.
Hey, Poonam, I want to ask about direct sales because this really caught my eye. Seeing a headline on the terminal from The Fly that a 20% increase in direct sales. You mentioned stores being closed. How important is the direct selling business to Nike, and is this something that continues to grow even after retail stores open up again post-COVID?
Absolutely. The direct business is very important to Nike. In fact, Nike was one of the first retailers in my coverage to say that they expect direct revenues to be 50% of sales over time. So if you just think about that number, that's half of their sales will come from direct over time. And, that continues to be a driver for their growth. Direct sales are going to be made through their apps and their stores. They're launching mono-brand stores, which are more digitally integrated. Also, their sneakers app and their fitness apps are going to really help drive those digital sales higher in the foreseeable future.
Does it mean they cut back on stores ultimately, or is it just they're smarter in terms of kind of meshing brick and mortar with digital?
It's not that they cut back on stores because they're not really over-stored like specialty apparel retailers in the U.S. It's about just right-sizing the stores, smaller stores, but better digitally integrated. to help drive a seamless shopping experience, not only in their own stores, but they have plans to integrate inventory with their wholesale partner doors, which will help more seamlessly sell their product without out of stocks or frustrations. When the customer goes to buy a Nike product, wherever they choose, they should be able to find it.
I wonder if that puts the retailers, not the Nike-owned stores, but the partner stores, the large sporting goods stores that have already been struggling, if it puts them in a sticky place with a company like Nike. I mean, obviously Nike's not the only one dealing with this, but how does Nike balance that relationship between making sure that it doesn't cut out the middle person who has been so pivotal to Nike over generations?
Yeah, I think it's about keeping the partnerships that are working alive, and Nike has strong partnerships with, like, say, a Foot Locker or Dick's Sporting Goods in the U.S., and there are no plans to really shrink that business. It's about shrinking business in doors that aren't performing well and really concentrating on the retailers that are doing well for them. And they're investing in that, so they're not pulling away. They're investing in creating seamless inventory between their wholesale partners and their own channels. So if you go to a Dick's Sporting Goods or a Foot Locker and you're looking for a Nike sneaker, let's say, and they don't have it, you can still order it through their inventory management system.
Hey, one number I want to ask you, Poonam, is Greater China revenue. I think it was $2.28 billion. Dow Jones saying that was up 51%.
Yep.
That seems huge. Is that just China, Greater China getting back and opening up after COVID, or is that something else?
It's the easier comparisons from last year. If you recall, China was the first, right, to hit. So they're lapping the decline in China from last year, so the shortfall that they had because of COVID. So you're going to see these bigger numbers as we move through the rest of the year for Nike, because we will be up against some very easy comparisons, not just in China, but beginning in 2Q and beginning in their 4Q in North America as well.
At the beginning of the month, and we only have a few seconds left, but at the beginning of the month, Ann Hebert, who was Nike's vice president, general manager of North America, resigned in the wake of a Bloomberg article that talked about her son being a reseller. I'm wondering if Nike, if you think management is going to be asked at all about the reselling and to what extent reselling is a part of the conversation with investors right now, because it could be a missed opportunity for Nike, right?
It could come up, but I think the focus will be on just driving their growth going forward and how quickly they think Europe will emerge and the supply chain bottlenecks will go away. I think that's really the bigger focus here right now.
All right, good stuff. Hey, listen, Poonam, thank you so much. Breaking it down. She's amazing. Poonam Goyal, Senior U.S. Retail Analyst at Bloomberg Intelligence, on the phone from New Jersey, just so knows the ins and outs of all of these retail companies. Nike shares, by the way, now little change, just up a hair in the after hours. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. Coming up, we're going to talk about brackets for a cause right here on Bloomberg.
Ooh, Jason Kelly.
Yes.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's back. March Madness.
It is, after a year off.
Oh my God, that's how we knew. This is one of the things that when things stopped happening last year, especially big sports, that's when we knew, all right, this is really serious. Our world as we know it is shutting down.
Well, because it's back, Brackets for a Cause is back as well, and we're going to be talking all about that in just a few minutes.
Such a great organization and fun, really fundraising. We'll get to that with Jason Kelly in just a moment, my former co-host. First up, though, let's get back to your top business stories. Some of the news after the close. Here is Charlie Powell.
Hi, thank you very much. Lots going on. Nike reported third quarter revenue that missed analyst estimates after supply chain challenges hurt sales in North America, its biggest market, a topic we were just talking about with our Poonam Goyal. Nike third quarter revenue, $10.36 billion, estimates $11 billion, shares now down by about 1%. FedEx's profit rose last quarter on increased prices and e-commerce deliveries. The company signals strong momentum for the full year as the U.S. economy recovers from the pandemic. And the National Football League announcing a new series of long-term multi-billion-dollar TV deals, including a historic contract giving Amazon exclusive rights to Thursday football broadcasts. Amazon shares after hours down by about 3.4%. Stocks fell from records. Oil slumped. Treasury yields touched some of the highest levels in more than a year amid concern the Fed risks letting inflation accelerate. Today, the 10-year yield 1.70% right now. The S&P down 58 today, a drop of 1.5%. The Dow down 153, down 0.5. The real damage, though, among tech stocks. NASDAQ 100 down 3.1%. NASDAQ Composite Index down 3%. Gold down 0.5%, down $9 the ounce to $17.36. West Texas Intermediate crude plunging 8.2%, $59.27 a barrel on WTI. Retail sales are near records. Employment and vaccinations are on the rise. That bodes well for in-person store shopping, according to Dana Telsey, the founder of Telsey Advisory Group.
I think that people want to get back to engage in store shopping. They may not go as frequently, but they may buy more when they get there. The experience of going in a store, of picking and choosing yourself, there's an aha moment there that I think we're going to be returning to. Maybe not as frequently, but the amount of transactions and the amount that you purchase will be just as great.
And among some of the retail names we track, Walmart down 1.3%, Target up 0.7%, Macy's down 5% today, Kohl's stores lower by 1.4%, Amazon during regular trading today down by 3.4%. So again, recapping, down day for the U.S. stock market, S&P dropping 58 points, down 1.5%. Big story, though, NASDAQ down 3%. On to March Madness. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Yes, indeed. On we go. It is that time of year, March Madness. And joining in once again are a bunch of Wall Street and business leaders for Brackets for a Cause. My former partner in crime, Bloomberg Quick Take, Chief Correspondent Jason Kelly, here with us on the phone in Sleepy Hollow, New York. I feel like I'm cheating. I'm here with my current work husband.
This is awkward.
It's like that cocktail party you go after after the divorce.
You guys look great.
Oh, Jason, sorry there was no room in here for you. I'm sorry.
Exactly.
You know?
No, here I am at our home. Anyway.
Exactly. As the dog.
Exactly. Yeah, it's a big deal. Listen, as Carol knows from our previous association together, I love March Madness, and this is a big reason why. So $500,000, guys, on the line.
Serious money.
Once again, 52 players, all pledging $10,000 to the charity. They pick a charity, they pledge $10,000, and then the pool is split up among the winners. And let me tell you, as you know, Carol, it's ferocious. These guys get into it.
Yeah. Now, listen, I know that just from having worked with you, like the conversations, like the morning after a game, and like people, the emails you're getting from different people. Tell us about the people who get involved.
Well, it's interesting. You know, we have some of our longtime players, you know, folks like Mike Novogratz, who I believe you might have heard from
We're going to hear from him later in this show.
Oh,
actually.
there you go. Well, you're going to hear from him later. I'm anticipating. See, that's what we call a deep tease.
Yeah, deep tease. Thanks.
Anyway, Novo, he is playing. One of the names that I think you'll be delighted by, Carol, especially, is the CEO of Bumble.
I love that. Oh, my God.
Whitney Wolf Hurd, she
Swipe
is playing.
left for this team. Oh, no, that's something else. Sorry.
There you go. John Gray from Blackstone, he's involved. The CEO of Hershey, Michelle Buck. I mean, we're really excited. It's going to be it's going to be fierce. One thing that I did want to mention that again I think you guys will be interested in. All the players, in addition to pledging $10,000, they are also pledging an additional $2,021 to World City Kitchen, just because of everything the pandemic has done around food insecurity.
Hey, Jason, real quick, give the history on this just very briefly, because we want to talk to you about this Amazon deal as well, because it's pretty big.
The brief history is basically we had this idea about 6 years ago to get people together, and they love it. And as I said, the competition is fierce. And so when all is said and done at the end of this year, we will have raised more than $3 million for charities. So basically, the winner will take about the winner's charity, I should say, will take about $250,000. They'll get 50% of the pot. So
Is that
it's
pretty
real
amazing?
money.
That's great.
Who won? I know, obviously we didn't do it last year, so I can just imagine the pent-up demand for everybody.
Yeah.
Like, let's do it, let's do it. The year before, do you remember who won?
Jim Chanos.
Jim
Chanos won. Bill
Chanos.
Ford from General Atlantic has won. Gary Cohn, when he was at Goldman Sachs,
Heard
has
of
won
him?
as well. So we got some notorious past winners.
All right, we got to ask you about this story.
Yeah, the NFL signing a historic TV deal with Amazon taking Thursday night rights. That's a big deal. I mean, this is a first for a streaming service. What does it mean for the NFL, and what does it mean for streaming?
It's a huge moment for streaming, to say the least. I mean, this is the shift that I think people have been looking for. I think cord cutters out there are like, yeah, let's do this thing. You know, now we're going to see live sports. That's really been the holdout in many ways. And the NFL, as you guys both know, it is the biggest. It is the behemoth when it comes to sports in the United States and around the world. So the fact that they are leaning toward this is a big deal, but, you know, still Sunday Night Football on NBC, Monday Night Football on ESPN, and the other big networks will still have games. I mean, these are the highest rated shows on linear television still. You know, the Super Bowl is #1, and then playoff games and everything else. So
Destination
NFL
watching,
still,
right? There's few things that we actually like, oh, I got to watch this game, or I got to watch something at a certain time or a certain day, right?
Yeah, absolutely. And the NFL, you know, reigns supreme over all other sports. I mean, we love the NBA. We talk about it a lot, but it's nothing when it comes to TV and general revenue than the NFL. It's big business. It's the business.
Really nice stuff.
So what comes next? I mean, we only have like 15 seconds left, Jason, but is it other sports leagues, other franchises going directly on Amazon? Does Netflix kind of stay away from this because this isn't their thing?
I think you'll have other streamers get in. And one thing to note, the WWE just signed a big deal with Peacock, so more streaming there. You can check that out on the Bloomberg Business of Sports podcast. See what I did there?
I was going to do that for you.
Oh,
Jeez Louise. God, no, I'm not going to do
never
it.
know.
Yeah,
You
all right,
never
just make sure you feed the dog, okay?
I will. I'll do my best.
All right. Bloomberg Quick Take Chief Correspondent Jason Kelly joining us on the phone from Westchester. Listen, those deals, the NFL, that's a big thing. As Jason said, when the NFL does something, man, it sends a really strong sign to kind of the whole sports world.
I mean, look, I remember years ago when Yahoo did this with one single game, it was a big deal. Now it's legit.
Multi-billion-dollar TV deals. All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Joe Biden says thanks to the use of the Defense Production Act, his administration will exceed its goal of 100 million vaccines well before his first 100 days in office.
Tomorrow, we will hit 100 million doses our administration has administered. But I've always said, that's just the floor. We will not stop until we beat this pandemic.
Biden and Vice President Harris will travel to Atlanta tomorrow and meet with Asian American leaders following the deadly shootings this week in that city, in which 6 of the 8 victims were Asian women. In a hearing scheduled before those murders, the House Civil Rights Subcommittee today discussed the growing rise in violence against Asian Americans.
Actor Daniel Day Kim, who's appeared in the television shows Law and Hawaii Five-0, spoke of 3,800 reported incidents of attacks on Asian Americans since last March.
We as Asian Americans have come to this country because we believe in the American dream. Many of us have succeeded, but many of us are struggling too, as we watch the most vulnerable in our community get taunted, pushed, slashed, and murdered.
Kim urged passage of 2 bills that have been introduced to address the upsurge in hate crimes. In Washington, Irv Chapman, Bloomberg Radio.
History was made today when Deb Haaland became the first Native American confirmed as a secretary of a cabinet agency. She was sworn in as Interior Secretary by Vice President Kamala Harris.
I, Deborah Holland.
I, Deborah Holland.
Do solemnly swear.
Do solemnly swear.
That I will support
Xavier
and defend.
Becerra also narrowly won confirmation today to lead the Department of Health and Human Services. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. A couple of stories we want to try and bring you, and they both have kind of a travel component to it. But one says what Americans are going to do. Listen, we've been talking about, right, they're going to get this new stimulus check, and there have been reports about they're just going to, plow it into the stock market or buy GameStop.
It makes sense. We heard from President Biden earlier today that by tomorrow the U.S. will pass 100 million vaccinations under his watch as president. As more and more Americans do get vaccinated, they're more comfortable traveling. And that's why Americans are signaling that they're going to spend that stimulus on travel and not necessarily plow it into the Robinhood app.
Yeah, this is interesting. Some new data now suggesting vaccinated Americans are going to get out of the lockdowns. They're going to splurge on plane tickets, as you said, instead of airline. They're going to, Disneyland. Bob Chapek of the Walt Disney Company. We heard from him yesterday, talking to our Emily Chang. They're opening up. So people are thinking about, okay, where can I go? When can I go? They're thinking about traveling. And in some instances, it's not just one trip. It's multiple trips.
And they're booking them. We're hearing from airlines in recent days that it's been going really well and it's been looking good as far as relative to where things were over the last year. The appetite is obviously there. The question is when are we back to normal?
Well, and this story by a team of reporters says Wall Street analysts are noticing kind of what's going on. Predictions that day traders would pour cash into the market have turned into forecasts for a surge in retail spending. So we're going to be traveling. In the meantime, a bunch of finance chiefs, so we're talking about the CFOs at a lot of U.S. companies, they expect to make big savings on business travel compared with pre-pandemic levels. They're just not anticipating that there's going to be a lot of corporate travel, and they think costs are going to be down substantially.
Look, for a lot of, this makes sense for a lot of reasons. The businesses over the last year have proven that they can do this over Zoom, they can do it virtually, they can do it over the phone. At the same time, I think there is a sector, right? And we heard this from JP Morgan's Jamie Dimon just a few weeks ago. His visit to California, that couldn't have been done over Zoom. So it's not going to fully go away, but it will look different, just like the office hybrid home will look different.
Yeah, and they say travel costs are going to be down big time for companies. The steepest falls were seen in the media, telecommunications, entertainment, and healthcare industries, so our industry.
Oh,
I'm just saying.
Not traveling anywhere, I guess.
This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Nike had a revenue miss, shares down 2.8%. FedEx delivered a better-than-expected quarter, up by 4% after hours. Amazon gets rights to Thursday Night Football. Stock slump amid an inflation concern. We had oil tumbling today. West Texas Intermediate crude plunging 7.8%, $59.55 a barrel. 10-year yield 1.70%. Tech stocks sold off today. The NASDAQ 100 index down 3.1%. NASDAQ down 3%, down 409 points. S&P down 58, down 1.5%. The Dow down 153, down 0.5. Gold down by 0.5%, 17.36 the ounce. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. At the Bloomberg Equality Summit this week, I hosted a discussion on the corporate response to criminal justice reform. And with me was Mike Novogratz, founder and CEO of Galaxy Digital, chair of the Bail Project, along with Robert Rook, CEO of the Reform Alliance. And in this excerpt of our conversation, the two talked about how business can really step up.
To start with, I think we need to grade ourselves. And on a 1 to 100, we're about a 12. We really are an F. We have a horrific system that degrades people from the moment they're arrested. And so if you think about the process of criminal justice, right? There's supposed to be some justice, which we have all kinds of racial biases, so there's not a lot of justice. But there also needs to be an end goal. And the end goal in the U.S. system really is caging people, it's degradation, it's humiliating people. There's nothing that tries to bring people from the system and bring them back as whole citizens. You can contrast that with what happens in Europe, right? To be the warden of a prison in Germany or in Norway, you need a master's or a PhD in rehabilitation. Every single prison warden I've met in the United States starts as a guard and moves his way up the system with no formal education. And so the whole system in the U.S. isn't geared to helping people deal with their trauma. And so we need a system that literally looks at people as citizens and says, okay, these people have screwed up. We're going to take their liberty for a while, and we're going to help them re-enter society as productive taxpayers. And so it's just, it's economically a stupid system. It's morally a bankrupt system. And we need to overhaul from top to bottom.
Robert, come on in on this in terms of what you think, what Mike just said, and what you think needs to be part of this big, broad conversation so that we get it right.
Carol, thank you so much for the question. And Mike, you hit it right on the head. And I'm going to come at the question from a personal perspective. I grew up in Dallas, Texas in the 80s and 90s. I saw firsthand a community dealing with the crack cocaine epidemic. I experienced firsthand what it was like to live and grow up in that community where our needs were around treatment and poverty, but we got incarceration. We got cops and bars instead. And so over the years, what we've seen is this generational impact on misplaced investments in our communities. And our communities have suffered. So now we have a system that has 2.3 million people incarcerated, 4.75 million people on probation and parole, and we're not doing anything to solve or address these issues. The conversation we need to be having right now is one about solutions. People have been organizing in industries for years, and we have done nothing about it, systemically nothing about it. And I think now is the time of listening, and we need to put forward real solutions so we can organize ourselves for a better tomorrow.
There is no doubt about it. Socially, the social component of just doing the right thing ethically, but there's a statistic I came across that about some 70 million Americans with criminal records are barred by law or stigma from contributing to the economy. I mean, there is an economic impact. There's a business impact. What role can business play in decreasing the rate of people entering the criminal justice system? Mike, what are your thoughts on that?
Listen, I think they could play a big role. I mean, there's a Bojangles box behind me. I'm an investor in that company, and me and our team at Galaxy, we pushed the management to hire formerly incarcerated. And it took 6 months of going down there and trying to convince them, and then they finally did. They were shocked at, when they announced it, they had managers crying that, wow, we'd be a company that would actually hire my second cousin who's been unemployed for the 3 years he's been out of prison. And so, there was an emotional win, but it turns out there's a whole lot less turnover with guys that get their first job and get started. And in the quick serve restaurant business, turnover is a big cost. And so it's been a hugely successful program. And so part of this is educating businesses that formerly incarcerated citizens can make great employees. Some of it was working with the state of North Carolina in this case to change their parole laws, right? We have horrific and stupid parole laws in America. It's like we put marbles on an ice skating rink in front of returning citizens who are barely standing to start because they've just been in jail for 6 years or 8 years and say walk. And so one of the Reform Alliance's main missions is, probation and parole. So in North Carolina, in that case, we worked with the Attorney General to change the parole rules for our guys so they couldn't get sent back for a speeding ticket or an illegal U-turn or a stupid parole violation, because you can't be an employer and have an employee not show up and not know where he is because he got put back to jail for something dumb.
So, Robert, you too, as part of your platform and what you're working at Reform Alliance, is jobs are an important part of this. Talk to us about how jobs can prevent somebody from going back to jail, can put them on a completely different trajectory.
The truth of the matter is most of the laws that created mass incarceration came from politicians and media. Corporations didn't have anything to do with it at the beginning. However, corporation policies perpetuate over incarceration and systemic neglect for people. The 70,000 barriers that people face, many of them have to do with employment opportunities. So here are some very specific things corporations can do. Number one, background checks. Corporations do not have to use background checks as a way of keeping people out of those particular jobs. Background checks absolutely should be used. People should know who's coming in, but it should not be a single factor for people that have felony offenses in terms of keeping them out. So that's number one. Another key thing that corporations can do is to start to see the entire community and the full person. The truth of the matter is people on probation and parole are living their lives in their homes, but they are still in prison. And what I mean by that is individuals often have stipulations to their probation and parole that keep them from work, that keep them from providing for that family. Let me give you one example. An individual may have a 9:30 a.m. meeting with their probation officer, a 3 o'clock meeting for anger management or drug treatment, and then they have to be at home on curfew from 8 p.m. to 8 a.m. Where are the opportunities for people to work? How can someone provide for their family if that's their day, if that's their schedule? So we need to have laws that allow people to check in with their probation officer, but also be able to work and provide for their family. That's what we need, and corporations can help and engage in that process.
Yeah, this is really rethinking the process and how to help individuals so that they don't get stuck in the system. Again, that was from the Bloomberg Equality Summit. That was with Galaxy Digital CEO and chair of the Bail Project, Mike Novogratz, and Robert Rook, CEO of Reform Alliance. And there's lots of great conversations. You can find them on our podcast feed at Bloomberg.com, also at the BloombergLive.com website as well. And it really mirrors what you talked about with Richard Branson.
Yeah, it does. Richard Branson and other executives coming out today to support the abolishment of the death penalty around the world. We interviewed him. We played part of that interview on Bloomberg Radio earlier today. I think the big question that I have, Carol, is to what extent do these moves push governments to make differences, right? Yes, the onus is on the government, but it's the companies that are doing a lot of the work right now. And there's still a lot more work to be done.
There's so much to be changed, and that's what these guys are talking about. But they feel like corporations, corporate leaders, or leaders from all kinds of institutions can step up. They've got a great platform and can help facilitate a change. All right, coming up, we got Sound On with Kevin Cirilli.
Oh, yeah.
All the news out of the nation's capital. For Tim Stanovic, I'm Carol Massar. This is Bloomberg.
San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Google doubles down on commercial real estate investing in offices and data centers. The search giant promising to create at least 10,000 new jobs this year, an investment of $7 billion. What does it signal about the search giant's position on working from home? We'll discuss. Plus, the global chip shortage. How bad is it? None more able to answer that question than Qualcomm president and CEO-elect Cristiano Amon. I'll talk to him in an exclusive interview. And pandemic perspectives. 1 year on, education and venture capital, both a very different experience than a year ago. We're going to talk to Khan Academy, Sal Khan, and Sequoia Capital's Roelof Botha. All those stories in a moment, but first, a tech sell-off dragging down the NASDAQ today. Our Ed Ledlow is in San Francisco with the latest. Ed, Kriti Gupta with us as well to talk about markets. Ed, let's start with you.
Yeah, I mean, how quickly things change. 24 hours ago, I was standing here saying the markets had taken a sigh of relief, not mostly sanguine about the Fed holding rates near zero through 2023. Fast forward to Thursday, worries about inflation, a lot of pain for tech stocks, treasury yields rising. You see the S&P 500, the main gauge of US equities, down the most in 3 weeks, down 1.5%. But tech, the real underperformer, right? The NASDAQ 100, that tech-heavy index, down 3.13%, also the biggest drop in 3 weeks. And it's no surprise then that the NYSE FANG Plus index, which is that basket of big-cap tech stocks with stretched valuations, some of the biggest points decliners on the NASDAQ 100 as well, also down 3.6%. And as I said, the environment here is one where treasury yields have been rising. US 10-year yield above 1.7%, its highest in about a year. You factor into that inflation concerns, we're back to that narrative. Rising yields, rising inflations, investors concerned about tech stocks with stretched valuations. Come with me into my Bloomberg and look at this chart, because it really sets up the question from this point. How long is this environment going to last? If you look on the far right-hand side of your screen, that is the longest streak of weekly gains in the US 10-year yield since the start of 2018. And that is a significant streak. So how long is it going to last? That is the question. If you're a tech bull or a tech bear, that is what you want to know right now. And fast forward to today, right, the present, the economy, the vaccine rollout, those are two big factors as well. And if you look at the different sections of the equity market over the last 12 months since the start of the pandemic, it's actually small caps, the Russell 2000, that have outperformed both the NASDAQ 100 and the S&P 500, the orange line down the bottom. Those are the stocks that are most closely tied to an economic recovery, the most sensitive to a reopening. But it is interesting that the gap between the S&P 500 and the NASDAQ 100, that white line, has kind of closed recently, but the outperformance of small cap has continued. We know that that's the other part of the story. Investors pulling money from those riskier assets, those growth stocks like big tech, and putting them into that reopening trade or that reflation trade. So lots to consider. Lots of it going on in the broader markets, but also lots of specific names moving today as well. And Kriti Gupta, what are you looking at?
Well, Ed, thank you. It's really all about those big tech names. You talked about the pain. I just want to show you what it did to Cathie Wood's very famous ARK ETF. You can see right behind me a 5.8% decline, and look at what was hit the largest. Its largest holdings, actually, Tesla, Square, and of course, Teladoc. So I want to show you here Tesla especially dealing with some issues over in the UK, their subsidy getting denied. You are also seeing some pain in Square as well. I believe 9% decline you can see right behind me. And then of course, Teladoc also getting spooked on the idea that Amazon may be entering the telemedicine business, even though that did not stop Cathie Wood from including more of that stake in her funds as well. So really a broad tech loss. If you flip up the boards and actually look at some other earnings stories, though, you are seeing Nike trade after hours, still carrying on some of that pain that it saw during the session. This, of course, following its earnings missing some of those estimates on Wall Street. This is a really important stock to look at because it has a lot to do with consumer sentiment, with consumer spending. And here in the States, you're still seeing that kind of grow a little. Abroad, though, a very different story. I want to show you this statistic really quickly. Abroad, though, in China, sales jumped a whopping 51%. And as we talk about that K-shaped recovery, the stock market already seems to be pricing that in. Things like high-end retailers like Williams and Sonoma up 19%, whereas Dollar General on the other end of the spectrum, down, I should say, just shy of 5%. So it really tells you that not all retail is created equal. There is that divergence already being priced into the stock market. Let's see if the underlying economy follows, Emily.
All right, Kriti Gupta, Ed Ledlow, thank you both. Moving on now to Google, planning major investments in the United States. The company says it'll spend more than $7 billion to create at least 10,000 full-time jobs here. This year, more than $1 billion will be spent in Google's home state of California. There will also be data center expansions across several other states. For more, I'm joined by Bloomberg's Nico Grant. Nico, a huge number. They're also investing in commercial real estate. But of course, it's less than the $10 billion they promised to invest last year before the pandemic hit. What can you tell us?
Yes, it's true that last year they'd promised $10 billion. The pandemic happened, and CEO Sundar Pichai said that the company would have to scale back on the hiring it had done. And the previous year, in 2019, it had pledged $13 billion. So we've seen a decline across these areas. But it's a very bold statement about where Google sees its future. It's no secret that the company has for well more than a decade now, invested in very pricey real estate, including, owning Chelsea Market, which is iconic in New York, a landmark. But the company is really envisioning that it wants to bring workers back at a time when many of its peers are saying that it's fine having a distributed workforce for an extended period of time, and that if employees want to continue to work from home, that's okay with them. Pichai has been more concerned about what might be lost with Google's culture if there was a true permanence to this current state during the pandemic. It's a company that has thrived on the types of spontaneous collaborations and independent projects that may turn into real products in the future. And so in September, Google employees will be expected to come back to the office about 3 times a week at least.
That's interesting. Definitely want to hear your observations comparing and contrasting the philosophies here. We've heard Mark Zuckerberg say he thinks 50% of employees will be working from home by the end of the decade. Reed Hastings of Netflix says he wants everyone back in the office. What is the sort of feeling among Google employees about this sort of hybrid model?
I think that many employees, including ones at Google, would like some ability to make a decision. What's most important, of course, is feeling like you're safe in the first place. And so Google had originally envisioned that their employees might return to the office sometime in the middle of this year, which we had heard a lot in 2020, that perhaps June or July of 2021 might be a suitable time. Now with the vaccine rollout, perhaps really coming into full shape in May, September, when kids may be able to go back to school, which is another consideration for a lot of working parents, now seems acceptable. But around the margins, you can expect some flexibility. It's 3 days a week. There may be opportunities to work with your manager if you have, special reasons or requests to be able to work in this way.
All right, Nico Grant covering Google for us. Thanks so much for that update. Now coming up, his nonprofit education organization has seen rapid change amidst the pandemic as remote learning became necessary for millions of students. I'll talk to Sal Khan, founder and CEO of Khan Academy, who has big plans to use a recent donation from none other than Elon Musk. This is Bloomberg.
They just recently gave a $5 million donation to Khan Academy. Elon, I hope you really feel good about this. This is going to allow us to accelerate all sorts of content.
for Disease Control has said it is, quote, critical for schools to open as safely and as soon as possible and remain open. But the agency's own guidelines of physical distancing of at least 6 feet has made that hard for many school districts across the country. That, coupled with resistance from some teachers' unions, means that remote schooling is very much still a reality for millions of families 1 year after the U.S. shutdown, and as a result, remote learning has shot up in demand and scale like never before. The nonprofit education organization Khan Academy saw its school districts grow from just 9 before the pandemic to more than 200 now. With perspective and predictions on education across the country and around the world, we've got Sal Khan, founder and CEO of Khan Academy, with us. Sal, good to have you back here as you have